Amazon has hit $2 trillion in market value for the very first time in history. We have that and more coming up today on Business Matters. All right, good afternoon. Thank you very much for joining me here today. I'm your host, Don Ma, starting off with markets. Major U.S. stock index today closed with modest gains. Though it was a choppy session, investors seems to be cautious here, and many were in a holding pattern ahead of the presidential debate tomorrow, and of course, the inflation report later this week. Meanwhile, FedEx today was among the biggest movers in the market, up 15%, and this is after the delivery giant reassured investors with a bullish annual profit forecast, and as well as saying that is weighing whether to sell or spin off its freight trucking business, which, by the way, some is valuing at $30 billion. And as I mentioned in the beginning, Amazon has joined the $2 trillion club, and this is the first time for the tech company to reach this valuation. It's being fueled by enthusiasm around artificial intelligence, no surprise there, and a potential interest rate cut from the US Central Bank. So Amazon Web Services is the largest cloud service provider in the world, and Amazon stock rose to just under $193 a share. This gave the e-commerce giant a market value of over $2 trillion. Now, some other companies to also reach this benchmark include Microsoft, Apple, Nvidia, and Alphabet. Amazon is the fifth biggest US company by market value. So sales of new single-family homes slipped in May to a 6-month low. And this is happening despite supply hitting a more than 16-year high. And this is according to data from the Commerce Department. The housing market has been hit hardest by the Federal Reserve's aggressive interest rate hikes. Some economists are anticipating demand to remain weak until mortgage rates see a decline. Freddie Mac data shows that the average rate of the 30-year fixed rate mortgage reached a 6-month high of 7.22% in early May. Now, despite high home prices and high mortgage rates, you can still make a profit though by flipping homes. Actually, profit from home flipping went up last quarter according to property data firm ATTOM. We have Todd Tita, Chief Product and Technology Officer from ATTOM, joining us now. Thanks for being here with us. Todd, how are you doing today?
I'm doing great. Thanks for having me, Don.
All right, so one specific thing I wanted to talk to you about today is that profits from home flipping going up last quarter. I want to know, how much exactly did it go up?
Yeah, great question. So this is a market we study every quarter to see how it's affecting the general real estate market. And we just released these numbers for Q1. So it's a little bit of a look back. And when we look at things on a dollar basis, Q1 was up about roughly 11% over Q4, and then 7% over Q3 of last year. And this is really the third time in the last 4 quarters that we've seen this increase happen. So we're starting to see some recovery in the returns that home flippers or investors are seeing in this area.
Okay, that's very interesting. Can you talk a little bit more about what do you think is behind this increase? Maybe elaborate a bit.
Yeah, sure. So broadly speaking, prices have been a bit more stable for investors than they were when they bought them. So when we isolate for when an investor bought a home versus when they sold it, we look at a 12-month period for that as a flip. Prices have increased a lot more than they were when they bought the home. So it's kind of the classic story of buy low, sell high, and things that investors have always relied on. It's just working out better than it has in the past 5 or 6 years.
All right, and I think some are wondering this as well. I don't know if you can speak to this. What particular cities are people getting the best ROI on home flipping?
Yeah, great question. So on a dollar basis, it does tend to track to where areas that have higher home prices in general. You invest a bit more to buy the home up front, but your return on a dollar basis is better. In fact, we looked at 20 of the top markets for this were just pure dollar return, and 15 of those were in home areas where home prices were more than 400,000 on a median basis. Typical subjects, typical actors in that space, San Francisco, San Jose, and even where I live in San Diego, cleared well over $175,000 on average on a flip. So that contrasts with a much lower $72,000 just generally across the nation. So high dollar value returns in some of those higher priced areas.
Okay, well, how long does it usually take, to make that six-figure number, would you say?
Yeah, this has actually been fairly stable. During COVID, we saw that it was stretched. Supply chains were difficult to get materials. Contractors were either not working or working less. So it was difficult to get flips done back in the 2021, 22 timeframes. But it's been fairly stable for the last year. It's roughly around 160 days. And that, again, it's come down a little bit from last year, but nothing very meaningful there. It's fairly stable.
Okay, let's talk about the trend here. So it is going up, but I'm not sure if we're seeing a trend. You're the expert here. Are we seeing a trend of increase here?
Yeah, so when we look at 3 or 4 quarters where there is an increase in the profits, that's encouraging. We've seen home prices, as you talked about earlier, and the increase in inventory. I think that's what we're going to keep an eye on as we get further into this year and see some of the Q2 and Q3 numbers, and see if that holds up. I don't think we're not quite there where we can call it a booming market again. It's still very difficult to find and then rehab and sell at a strong profit in this market.
Okay, we just have a few more seconds here. I want to squeeze in one more question. Do you see a high correlation between the increase in profit and how strong the economy is?
I think generally speaking, prices have gone up because last year there was a lot less inventory than we're seeing this year. Prices pushed up because of that. Sellers are on the sidelines. So I think some of those factors are driving prices up, which just benefits flippers in the market.
All right, very well. Thank you so much for your time today, Todd.
Yeah, thanks for having me. Take care.
All right, moving on from that. Here's a question. Is YouTube a friend or a foe? Well, that's the question some major entertainment companies are asking themselves. YouTube now has the largest share of TV viewership of any streaming service ever. Disney now only has a fifth of YouTube's TV viewership. It's now considering putting more Disney content on YouTube to attract a new audience. But it's also thinking about adding its YouTube-style user-generated content to the Disney streaming platform. And these are all efforts to keep up with YouTube. Netflix, on the other hand, doesn't view YouTube as a viewership threat, but as an advertising threat. YouTube has 50 times more monthly active users than Netflix's ad-supported product. So to try to catch up, Netflix is even contemplating launching a free service to attract more viewers and ultimately more advertisers. On the flip side, some streamers like Warner Bros. Discovery, for example, aren't as worried about YouTube because of its young YouTube audience, because Warner targets an older audience. All right, besides that, government-funded ratings firms accused of political bias. These firms give ratings to businesses and news organizations and affect what children see and hear in school. Here's the story.
The House Committee on Small Business held a hearing on government funding ratings firms accused of political bias.
The committee uncovered a vast network of nonprofits, research groups, and other entities that receive government funding with the goal of stopping misinformation. As these groups attempt to define what is true, there are many voices and businesses whose reach is being reduced.
Congressman Roger Williams says these groups rate businesses, including media organizations. These ratings greatly affect how much business they get. Policy analyst Carrie Sheffield says these ratings can make or break a business.
40% of small and medium business publishers say that digital ad sales drive over half of their overall revenue. So this could be the death knell.
Government funding ratings firms such as NewsGuard and the Global Disinformation Index, or GDI, give ratings to news firms. Real Clear Politics' Benjamin Weingarten says they overwhelmingly give low ratings to conservative news firms.
Many maligned by NewsGuard and GDI report plummeting ad revenues, which GDI's executives have gloated about. Some say they've lost traffic.
NewsGuard has partnered with the American Federation of Teachers. Over 1 million teachers now have NewsGuard in their schools, influencing what students see and hear.
American children are going to get a left-wing or left-wing oriented diet of news content going forward to the extent the relationship persists, and what's called media literacy education increasingly gets mandated in states across the country.
Law professor Marianne Franks says the government is not censoring citizens by funding these ratings firms.
Providing information to businesses about other businesses is not censorship. Efforts to convince consumers, advertisers, and the public that certain content is false, is fraudulent, harmful, extremist, harassing, or exploitative is not censorship.
Franks says the government is free to speak on its own behalf and take sides on controversial matters.
And a joint report is predicting a fall in new vehicle sales in June compared to a year ago. Consultants J.D. Power and Global Data are expecting sales to dip as much as 7%. And the report is blaming a cyber hack as CDK, which has impacted dealers across the U.S. So the company provides dealer management systems used to complete sales and more. It is used by more than 15,000 retail locations in the nation. But it's not time to panic, not just yet, because J.D. Power says the CDK outage will not affect overall demand. Instead, it expects sales to be delayed until July or when the issue is resolved. And did you know that some organic food that comes from overseas is not held to the same requirements as American produce? Well, that's what one organic food watchdog says, and it's warning that this is hurting American businesses and consumers. Here's NTD's Sean Marshall.
The organic farmers watchdog group OrganicEye says American farmers are being disadvantaged versus foreign importers when it comes to organic food. Foreign imports aren't being held to the same requirements as American products. OrganicEye is now telling the USDA to level the playing field.
Farmers can't compete. They're paying for organic certification and inspection as the law requires.
Foreign suppliers are allowed to be certified by certain private companies, but American farms have to be certified by the USDA. And OrganicEye says the USDA's requirements are much higher.
Instead of having each individual farm inspected annually and certified as the law requires, they're allowing corporate agribusinesses to become the certifiers for their own suppliers. Obviously, that's an inherent conflict of interest. It's in conflict with U.S. law, federal law, and we're a part of a lawsuit challenging that.
OrganicEye's research found how hazelnut farmers in the Pacific Northwest are being shut out of the market and dramatically undercut on price. And turmeric farmers in Florida and Hawaii have contacted OrganicEye's hotline to report that they too are losing their livelihoods. It's also potentially harmful for consumers who may not be aware of the differences in requirements.
It's a clear pathway to fraud, since there's no independent corroboration on how these foreign farms are operating, how the handlers, the processors, the middlemen are all handling these products. And obviously, when we pay more for organic food, we believe that we're getting a product that's safer and nutritionally superior. We want to make sure we're getting what we pay for.
Castell also said that buying from markets that sell local growers' produce is, in his opinion, the best because in his 20 years, he's never found fraud except in one very isolated case. Sean Marshall, NTD News.
Now, staying on farmers, Denmark has become the first country in the world to place a carbon tax on agriculture. And that means dairy farmers will have to pay an annual tax of about $100 per cow. And this is for the emissions that's coming out of the cow's rear end. So the government says the new tax will help the country meet its climate goals. Denmark is a major dairy and pork exporter, and agriculture is one of its biggest sources of emissions. And it's been reported that the Danish dairy industry generally accepted the agreement and goals. But of course, some farmers are angry. Denmark's parliament is expected to approve the new levies on livestock later this year. Then the tax will go into effect in 2030. Now, when we're talking about inflation, there appears to be a big difference between what the data shows and how average Americans feel. Economists, analysts, and government officials say they've seen big improvement from inflation compared to its peak. However, many Americans still feel that inflation has not let up. And why is there's this difference in perception? I spoke to Lance Roberts. He's the chief investment strategist at RIA Advisors. Here's what he says. Lance, thank you so much for being on the show today. So there's a fascinating new report that I saw out by your company on the website today, and this article talks about the different perspectives on inflation by different people. So, in regards to that, can you explain to me why is it that the Fed and economists are encouraged by CPI inflation coming down, but, at the same time, most citizens believe that inflation is still rampant?
Right. Well, again, it's two different measures. And when it comes to investing, we have to be really careful about separating out our personal feelings versus what the market looks at. And this is one of the big challenges for investors right now, because yes, we go to the store right now and eggs are $4 a carton, and milk is expensive, and all the prices have gone up, and we've had shrinkflation where we get less in a bag than we had before. And so we know all that, right? We go to McDonald's to buy a hamburger and it's very expensive now. So as citizens, we're dealing with that inflation. We remember, psychologically, that these things used to be a lot cheaper a couple of years ago. But see, that's a very different perspective than what the Fed is looking at and what economists are looking at. What the economists are looking at is the price change from last year slowing down? Now, see, what individuals are wanting is they're wanting prices to roll back to where they were. So that would be deflation, right? So that's prices falling. So as investors, and as we're looking at the markets and looking how to invest our capital, we need to pay attention to what the economist and the Federal Reserve is looking at, because that's what markets respond to, not our personal experiences about inflation.
Okay. Is there an argument to be made that the data from the economist side should reflect more as to what the people feel in the real world?
Well, again, what are we trying to achieve here? And again, when we take a look at the government data as an example, whether it's employment or whether it's inflation, whatever it is, they can't really reflect each other that well, because our personal experiences have to do with where we live. The cost of living in New York or in California is drastically different than where I live in Texas. Those are much more expensive than where I am here. So to have an inflation measure that reflects the personal experiences of people in different income brackets, different age groups, different locations, is really quite an impossibility. So from an investment standpoint, we have to come with some measures that we can get an approximation of inflation, those rates of changes, because that's what's going to tie into estimates about economic growth, and most importantly, earnings growth.
And as well, you've made the point before that it doesn't really matter that if official data doesn't reflect reality to an extent, because that's what traders, that's what investors are looking at when they're making decisions with their money, right?
Absolutely. And this is a really big challenge for investors, and particularly right now more than anything else, is because, we talk about the employment, the Federal Reserve talks about the employment data when they do their Fed policy meeting. And if you take a look at consumer confidence, right, expectations for incomes being higher in 6 months has fallen sharply. Expectations for employment are deteriorating. So, jobs hard to get is rising rather sharply here. So what people see in terms of the employment market is not this 4% unemployment rate that the Federal Reserve talks about. But as investors, that's what matters.
So it's entirely possible that price growth goes back to 2% and the Fed declares victory, but people in the real world still won't feel good about inflation.
Absolutely. And then and you're going to see that probably, I would estimate, and again, just kind of looking at some of the recent polling, some of the confidence measures in the current administration, I think that's what you're going to see come in November when it comes time to vote, because when people vote, they vote by their pocketbook. When they go to the polls, they vote about how they feel economically.
All right. Well said here, Lance. Thank you very much. RIA Advisors. And coming up after the break, Verizon about to take a hit over 911 call outages. Hundreds of people couldn't access the emergency services. And China's property crisis hits the country's capital, Beijing, forced to try to boost the critical sector. We'll have that and more in just a moment. Stay with us. And welcome back. Thank you for staying with us. A few more stories today to go through. Verizon has to pay a $1 million settlement, and this is over 911 call outages in 6 states. The incident occurred in December 2022 for 1 hour and 44 minutes. Hundreds of people were not able to reach 911 on Verizon's wireless network. The FCC says Verizon violated federal rules by failing to deliver 911 calls during the outage. And U.S. crude imports last month reached numbers not seen since July 2022. And according to data, imports rose to more than 3 million barrels per day in May. This is despite tepid demand. Data shows product supplied for gas in mid-June was slightly below the 10-year seasonal average. All right, another big city in China is trying to prop up its struggling property market. China's capital, Beijing, trying to make it easier for people to buy a home. Property sales and volumes have been on a downward spiral. So the plan is to lower mortgage interest rates and lower the down payment required. Until now, you needed to pay a 30% down payment on your first home. Now, you'll just need to pay 20%. It seems to be a national initiative here, and the country's central bank issued guidance on mortgages last month, which many big cities have already followed. Property investments have become a major part of Chinese people's wealth in recent decades, and the property sector is a big part of the nation's economy. So falling home values could make a lot of people unhappy. And shoppers, you gotta circle your calendars now if you're looking for good deals online, because Amazon announced yesterday its 10th Prime Day event will take place on July 16th and 17th. So if you're a Prime member, you'll have exclusive access to millions of deals. Amazon said last year consumers saved $24 billion from deals and coupons. Now, just before we go, remember Steve Lance and Tiffany Meyer will be presenting an exciting and well-rounded analysis of the first presidential debate. Watch the first half of The Nation Decides at 8:30 p.m. Eastern Time tomorrow, Thursday, June 27th, and stay tuned for the live CNN presidential debate on CNN or simulcast on NTD News at 9 p.m. Eastern. And then we'll jump back on with the second half of The Nation Decides right after the debate. So don't miss it. It's going to be good. All right, on that note, all the stories we have for you today. Thank you very much for watching. And if you have any feedback for the episode, please feel free to let me know. You can email us at business@ntd.com or simply leave a comment online. I do read them, and as I always say, business matters. We'll see you tomorrow.